Hey everyone, very good morning. I hope you're doing well. Apologies on the earlier start than usual. I've just returned home, so I figured that um, I'd be up and at it straight away. So therefore, you guys can join me in my first thoughts of the morning, to be honest. So straight out of the bat, we'll go with yesterday's place. I took a loss on GCAD yesterday. I also took a partial profit on GCAD to pretty much make up for the loss, but I thought the loss on GCAD was worth the loss, and certainly worth the position, we can say. I had a 1 minute break of structure at the area in which I believe caused the most recent high, so it would have been around this area just here. And then I had that 1 minute break of structure in and around this area. I wanted to be aggressive with it. We could see that price was stepping up on the 15-minute time frame. We certainly started to break structure points to the left-hand side in and around these areas. So after the 1 minute break of structure, of course, I went for the long position, and it wasn't meant to be. Then after that, I recognized after price pushed down into this area, we had the immediate reaction. My thought process straight away was, why are we reacting from there? There isn't any order block. However, we had previously pushed from there. We've come in once and twice, returned the fourth time. So it was certainly a session low in the market. From a session low, you usually get those kind of immediate reactions coming straight out of the market. And then, of course, I refine that area down straight away. You can see almost instantaneously, we was left with a 15-minute order block, which was mitigated straight away. And then when price came back down to these areas, then of course I took the long position. And to be honest, as I said, it was pretty much 1-to-1 when I closed that out, or just under 1-to-1. And that's how I pretty much ended the day yesterday, to be honest, everyone. So not too much to shout about, but certainly not a bad day at all. So that was kind of the plays yesterday, just from memory. Nevertheless, today is a new day. So we'll start again from the top. So DXY again, weekly time frame. It's not doing too much at the moment. And what I can see is actually we're having a bit of the range coming out of the market on the DXY. And initially, I was looking at the 4 hour time frame to get that information, but taking a little bit of a step to the right, i.e., the higher time frame, the daily time frame, I think it's a little bit more concrete in terms of the range. You can see we're not really. Well, the first comparison to make when in doubt is have a look what price action can do, and then understand that, yeah, we can move sideways for a while, followed by a move. So, in my opinion, we are moving sideways. There is a slight caveat to that, of course, with one candle in particular that has broken below, which was this area here, also on the 4 hour time frame, that allowed me to believe that, okay, we could potentially look at price doing something like this after a low, pull back for a lower high, for the lower low continuation. So I still think that is a potential play for today as a result of there being no other. Ooh, just hold on a moment. I was just about to say no other 4 hour order block available, but there is something slight up at the highs, which we'll find on the lower time frame. What I'll do first and foremost is place that in on the chart, so you can miss something from time to time, just like so. And let's turn that to the 4 hour order block, of which it is. And let's put that across all intervals. So that's right up at the highs there. Not quite the highs of the range, but certainly up at the highs. So if someone's going to ask me, where did this particular break of structure come from? My answer is, well, there is a 4 hour order block right up at the highs that caused this low in the market. Therefore, I'm going to expect price want to gravitate up towards that lower high area before potentially a lower low. In conflict to our short position, we have now the 4 hour 50 MA that initially I wasn't really paying too much attention to on the range because, as you can see, the 4-hour 50 EMA is going straight through price action. When I'm seeing an EMA go straight through price action, that pretty much solidifies the thought process of price being arranged. However, what I will still look to do if the DXY is to move off of this area towards the downside, my cross pairs I will manage based on what's going on the DXY. So I'll have an alert just above that 4-hour 50 EMA, which I'll put in just now. And let's say, for example, I take a long position on GU, EU, or AU, and the DXY reaches that 4-hour 50 EMA where we could potentially expect a bounce off it back towards the upside, then that's where I'm going to have to manage my position by, because the DXY is indeed the catalyst, in my opinion. So that's how the cookie's crumbling there. In terms of the daily time frame, we're still looking at a bit of a bullish trend longer term. However, most recent dates, this is what I mean by price not really doing too much on the weekly or correspondingly too much on the daily. Can see we're just moving sideways, and depending how you manipulate your illustration of your range, i.e., if you was to put that slightly low, you can see we're just making clear highs and clear lows. But I'm going to give price action a chance in terms of taking a short position maybe a little bit sooner than price actually returning to the highs of that range. We have now just entered back into that daily order block that was created right up at those highs as a result of one particular bearish candle, this one just here, which left us with a daily order block and prices respecting it to the downside. So we're now back up into that territory, looking for the short down. The short down into where? I still believe down into the daily 50 MA as price is respecting it. And then when price reaches that daily 50 MA, hopefully tapping into the weekly order block, maybe even go slightly lower into the weekly 50 EMA and daily order block refined, which I highly doubt actually, considering we're respecting that daily 50 MA. Regardless from this area in the market, I'm expecting price to then start to move towards the upside. So currently, I am short bias on the DXY in the immediacy. So if we start to refine this first order block down, we have not yet tapped into this 15-minute order block right there up at the highs. So I still believe there is a little bit of DXY strength potentially to come out of the market. And what I mean by strength is that back up into that 15-minute order block. And then what I'll be looking to do is go down to the lower time frames, wait for a break of structure on the DXY. Perhaps if I don't find it on my cross pairs, I'm looking to trade in the long direction and then look to execute accordingly. The reason why I need to wait for the break of structure on the DXY is because now the DXY, as a result of this 4-hour order block that I've just seen, we then have higher time frame directional plays that could well still stick slightly higher. So here's the second 4-hour order block that's available right there up at the highs, and that would correspond more towards the highs of the range. Also, the fact that we've had the low breakout, and then we're looking to take the first order block that caused that move towards the downside, which is in and around this area. However, there is no, or is there? There is a 15-minute order block. So now we have two areas in the market. And because we're actually in the range, what I'm more likely to do is get rid of the lower one. We'll give price a chance and understand that these are rejection points in the market, and these are potential turnaround areas. Not to say as soon as price gets to these areas, we should then be executing positions immediately on the cross pairs. It just means that we should start to have a look. So 2 points of interest on the DXY towards price moving to the downside. And then what I'm going to be looking to do is, as price starts to trend up, I'm going to put these structure points in the market that I want to see broken to the downside. in a conservative way if I have no confluence whatsoever on my cross pairs, and then I'll just be using that accordingly. So if the DXY pulls into this area and we do have confluence on our cross pairs already, then what I'll be looking to do is just isolate an area in the market, wait for a 1 minute shift, and take that short position down, managing by the 15-minute point of interest in the opposing direction on the DXY, which should correspond nicely on your cross pairs in terms of your long positions, taking a long position quite aggressively. So this is one aggressive approach that you can use across all of your pairs, not just the DXY, but it's a DXY that we're analyzing at the moment. And then, of course, the more conservative approach, if we were to look at this in terms of highs, higher lows, higher highs, here becomes a structure point as a result of the 15-minute time frame making its most recent push from that area. Therefore, the more conservative approach would be price breaking that higher low, pulling back up into an area that caused a breakup structure. You can then look to take this as a limit order once you have that breakup structure. However, the cherry on top of the cake would be just a nice little 1 minute shift, and then you're inside, or rather onside, with 15 and 1, and then up at those highs, you'll be looking to utilize a nice 1 minute order block or even a 5 minute order block. So nice aggressive approach. Call it aggressive. It's just because you haven't really awaited the key structure point break of structure. However, there's nothing wrong from time to time from being the first in a position. For example, last week, took some aggressive positions and they paid dividends. However, yesterday on GCAD, I took exactly the same in terms of aggressive position like so, had a structure point in the market, price broke below, 1 minute order block left behind. As soon as I had that, set a sell limit from that 1 minute order block. And it's just unfortunate that as a result of it being aggressive and priced just in this method or in this manner at the same time, created the higher high, came back down, created the higher low. And as price came back down, that was pretty much my entry in the 15-minute time frame. However, the 15-minute had better ideas. Of course, moved towards the downside, but it's the same process of what we're seeing here on the DXY. So I hope that makes sense, everyone. You've always got the conservative approach that you're able to wait for. If you're confident in a particular pair, then you can wait for a lower time frame, aggressive type of approach, and be break even and look to manage your position by the structure point on the 15-minute time frame. So I hope that makes sense. I feel like I'm waffling a bit, but I hope it makes sense for you guys listening later on this morning. So that's a DXY, but with that said, that's kind of the plays that I'll be looking to take up the day. So DXY weakness is what I'm anticipating. And then with that said, let's have a look to see if we can capitalize on that DXY weakness across the pairs. So weekly time frame. We're still looking to reject that weekly 50 MA for the week as we start getting into Thursday and Friday, or Wednesday, Thursday, Friday rather. It's all looking good for that weekly rejection. Unfortunately, based on the daily time frame, today may not be the day. So that's why GU has a bit of an amber as opposed to a green, because I can see the conflict straight away. Yes, we are into a daily order block of which caused price to do higher highs, higher lows, higher highs, breaking structure points to the left. Therefore, we come back down to the order block that caused it. So it's all good based on order block and technicals. However, our EMA on the daily time frame, yesterday's daily candle, unfortunately, closed below that daily 50 EMA. So we have immediate conflict. And with that said, we don't really have much range either towards the upside. Of course, it wouldn't prevent me from taking a long position, but it does mean I'm going to have to look to manage that position pretty aggressively because my mindset is that, well, yes, we are rejecting that daily order block, but I'm more than likely going to reject that daily 50 EMA as well. At some point, my strategy will fail me, but it will work on my favor. And what I mean by that is I just need a daily bullish candle. With that daily bullish candle above that daily 50 MA, I'm now trading with the EMA on side without having to guess or anticipate my strategy failing me. And then, of course, that daily bullish candle trading out of a daily order block to the downside on the lower time frames as well. That's going to give us those breaks of structure once we have that bullish candle, wait for price to come back and look for the long. So today, it's not a no trade day for me on GU, but I just do recognize that there could be better circumstances to look for a long position. So I'm not going to put it in the bin just yet. We'll still go over the reasons why I think a long position makes sense. However, the risk of that long position is quite a high risk one. So if I am going to take GU, I'm probably going to do it with reduced risk just based on what I already know from the EMAs and my strategy. And I'm going to need to manage my position as soon as pretty much it moves in my direction. Because as you can see by the 15-minute time frame, we don't really have much range back towards that daily 50 MA, where we can see quite clearly price has broken below it for the first time for a couple of days. So therefore, expecting price, to be honest, to want to move into it and potentially continue and move towards the downside. So that's my thought process at the moment. A little bit hesitant with GU, despite it looking good. I can see where things could go a bit sideways with GU. Nevertheless, if you forget about that completely, what do we have? Quite a nice looking trend on the 4 and quite a nice looking price action on the 15. Let me just double check myself. Highs, yeah, certainly does look good. On the flip side, let me just see what's here. Okay, nice. Back to the thought process. So 15-minute time frame. We zoom all the way out. Here is that 4-hour order block. Let me just bring it back for your attention. Down at these lows, the lowest 4-hour order block, like on the DXY. The DXY is approaching potentially one of two order blocks. They're in very close proximity to one another. Therefore, I believe here is the better, well, the only area on GU because, well, there is no other order block available. But it does have that synchronization quite nicely with the DXY in terms of if we can move a little bit deeper into this 4-hour order block, then hopefully on the DXY we'll move slightly higher into the highest 4-hour order block and look for the rejection to the downside on the DXY, which of course will give us that move towards the upside on GU. So I think it's making good sense at the moment, hence why I just don't want to chuck it in the bin just yet. But I understand the risk that is going to be associated with taking along into a daily 50 MA. So what's the play? We'll refine the area down and you can see the 15-minute right there. The reason why I did have it big is I just wanted to see if there was another 15-minute be underneath this area, because if the DXY starts to move slightly higher into the higher time frame, into the 4-hour, top 4-hour order block, then potentially I just wanted to see if there was reason for price to want to move slightly lower on GU. But at the moment, I don't see that. So we can't make it up. Let me just double check if this could be a session low. So 1, 2. No. So here is the area, in my opinion. We've come into that area. We've not really done enough, in my opinion, from that area. So what I'm going to need to see is, unfortunately, nothing aggressive. I think it's a little bit too risky to take an aggressive position. What I'd like to do is wait for price to break that structure point, pull back down, and then give me a 15-minute order block, because I can't keep reusing this 15-minute order block. And for me, it's not cool. Well, 1, 2, 3. You could then call it a session low, but I mean, it's the same protocol with the session low. I'm going to want to see a bullish 15-minute candle from the area. What that bullish 15-minute candle will do, if it's engulfing, it will give me a 15-minute order block on the 15-minute time frame. But if it's just a bullish 15-minute candle, it may just give me a 5, and it will certainly will give me a 1-minute order block refined within that area. So once I have that bullish 15-minute candle or engulfing, I'm then going to wait for price to come back down to that order block and then I'm going to look for the long. But I must have a break of structure first and foremost to do this. If I don't have that break of structure, but I get this down at these lows, it's still not quite enough for me. Gonna want to see that broken first and foremost. What this could also be, well, here is the risk. If we start to break above this for the first time, look here, we'll be breaking above that daily 50 MA. So when price comes back down, so I'm going to draw the daily candle. This is the daily candle. Currently, this is where we are on that daily candle. Once we start breaking structures, the daily candle is going to look quite bullish. As price then comes back down, the daily candle is already going to leave us the wick to the highs. So then when we take the entry, we're anticipating that the daily candle is then going to start moving to the highs again. So this is why it's very important upon entry to move towards break even before we arrive at the daily 50 MA, because we have the risk that once we've made the high of the candle, we've made the wick, we may then start to make the low of the candle for the day, leaving the wick, and then push back up. So it's a really, well, it's an okay position. In the journal, I can already understand what I'd be looking to write, and I hope you guys can see it also. So that would, of course, pave way to going aggressive on arrival, a price coming back down, but I don't think it's worth it just yet. If we can see, or if I can see rather, a good turnaround on the DXY up at the highs towards the downside, then it could be something to consider. Being in the position the first time price starts to move towards those highs. But in my opinion, once you start moving towards the highs, this is the daily candle, breaking the daily 50 MA, I already foresee that price would want to make the low anyway of the candle. So what I'm trying to anticipate is when price makes the potential low of the candle, because we're waiting for this to be created, we would mitigate the fact that price could just do that against you on the daily candle. Once the daily candle then flips again, that's when more than likely I'm hoping that we would then gain the entry um, on that daily candle. Then for it would be more of a hope at that stage, not technicals. That price would then want to close above the daily 50 MA. But it's at that point then, as soon as price moves towards the upside, you've got to go to break even. So that's the plays of the day, all dependent on your risk or what you're comfortable with risking in terms of position wise, not in terms of risk on a particular trade. The better position, I would say, wait for the break, got to take the pullback, bullish engulfing or bullish 15-minute candle that's going to safeguard you against a daily candle flipping bearish, and then take the position once you've got your entry criteria. And the best outcome of that, I would say, well, if you're a new trader, would it make sense to take a long into a daily 50 MA where price is looking to reject to the downside? There's your answer. So depending on you as a trader, but I don't mind to you. It's one of those that you can understand why you're looking to take the play. So EU, again, a bit of a conflict. I don't know why I laugh at these pairs when I get the conflict, because you just want to say, ask it, but why can't you move correctly? The weekly time frame was still nothing's unchanged. I think the weekly looks really nice in terms of bearish move down, order block left behind, weekly, daily 50 MA supporting the short, expecting price to roll up into that area for us to short alongside the weekly. I mean, that's pretty easy, good going. Then on the daily time frame, I don't think I've ever seen a daily 50 MA being respected so beautifully of late. We're very clearly bearish longer term, but again, look at this kind of hold up that we're getting on the daily time frame. So it's a bit of a gotcha, in my opinion. If we're then to superimpose this onto the 4-hour time frame, it doesn't really look as if we are having a hold up. It looks like a quite a nice bullish uptrend. But if I put that onto the charts, you can kind of see it. We're not really taking out highs as such. We're certainly not taking out the lows from this point onwards. So potentially the thought process could be right that we are just entering into a range. With that said, then, would it not be good to look for a long position at the lows of the range and a potential short position from the highs of the range? That's rhetorical. Of course, that's a good place to start. So the fact that price is now at what I believe could be the potential lows of the range, paired with the fact that we are anticipating DXY potential weakness to come out of the market from that higher time frame 4 hour order block, I think EU looks quite good for a long position. So we've got the confidence that we're potentially at the lows of the range, confidence that potentially the DXY is maybe going to print some, well, give us that weakness coming out of the market. We are looking at potentially GU long, but we've got the conflict that we have the daily 50 MA to kind of wreak havoc upon the long position. So EU, straight away, I can see that the daily 50 MA is not a hold up. That's actually a really good looking target, bigger picture type of stuff. The 4 hour 50 EMA, I think we've got very good range for the 4 hour 50 EMA. Where I'd like to take manage the position by. It's looking good. And then this 4 hour order block. Again, I wouldn't say it's the only 4 hour order block, but of late, if we were to look at 4 hour structure that's caused a high in the market, it can't, although I think it's a range potentially, you really can't get away from the fact that if you say one line will do it, here's a structure point, and then we've clearly broken structure to the upside. Where has that come from? Well, it can't be here. It's certainly here. So therefore, if price wants to return back to that area, they'll be looking for a long position from a refined area. Of course, yesterday it looked not too bad as price coming into that 15-minute order block, but that thought process was quickly obliterated with price just closing below it. And now if we start to refine that 4 hour order block lower and lower within the 4 hour range, excuse me, within the 4 hour order block, what we can see is, if you bear with me, 15-minute order block right there at the lows. That caused this always question your order block and say, well, what has that particular order block done? And I can see from that order block, if we say one line will do it, here was a structure point in the market. Price then came back down, or rather came into an area, pushed up, broke structure point, and then left an order block behind. That's all good news. So are we there yet? Not quite. That's why I like it. So I'm expecting price to want to dip into that 15-minute order block. And then I want to see some bullish signs because we recognize the DXY has those two areas up at those highs. And we also recognize that G is potentially not ready just yet. So I want to get a sign to say, well, we are going to start moving from this area, not potentially down at the ultimate lows or lows of the range, because ordinarily I wouldn't want to be taking a long position from within a range. I want to be taking a long position from the lows of the range. There are two areas in the market where I foresee a reaction from. It's either going to be the 15-minute order block or it's either going to be the lows of the range, which you could call, well, it's not quite a session low, but it's the lows of a range if you're going to take a range position. If I'm wrong about the range, then of course, here is the refined area on the 15-minute time frame. So you're going to have to be quite sharp with that one. Also understand that there are two separate positions. So therefore, you might want to start managing your risk on that position, i.e. splitting your risk. That's something that I'm definitely going to have to do because I like both positions. If I get a break of structure, let's say of this area, just like on GU, an area in the market, and price then comes back down, or even in the inverse, price taps into that area, breaks some structure points, comes back down, then I'll be looking for a long position. However, need to double check the DXY to understand, has a DXY just flown through a nice area, or do we also have a 1 minute break of structure or bearish engulfing 15-minute candle on the DXY, that's going to give us that incentive to take a long position from the area. So exactly how I'm going to take this play, because price hasn't tapped into that 15-minute order block just yet, it's very much so still available. There are a couple of methods available. You could be very aggressive with it because price actually hasn't tapped into that 15-minute order block, so it's very much so still available. So here's one thought process. Price comes in. We recognize that the most recent low in the market at the moment has come from this area. As price then, let me start from here. As price prints back down and gives us a new low in the market, you have the opportunity to be aggressive immediately, breaking 1 minute structure points to be break even by this area that caused the low into the area that's available. Of course, the more conservative approach is understand what caused that most recent low into that for a 15-minute point of interest. Wait for that to be broken towards the upside. Come back into the 15-minute order block. If it's already been tapped, then the break of structure should leave you an order block behind. Then you'll be looking for price to reject from the order block, move towards the highs. That's two potential setups. Or, of course, the more, well, just the final one then, what you could say is lower low. So here remains the ultimate structure point at this moment into the market. But to be honest, by the time price prints down, a new low, excuse me, a new lower high would have had to have formed, unless price action doesn't print as nicely as described. And from this area, we just have a complete slide into the area. Then, of course, that is the structure point. Like on AEU yesterday, I waited for that to be broken before looking to take a position. And it's unfortunate that price, of course, moved to the downside, but it broke my order block towards the upside anyway. So it is what it is there. So you've got this key structure point, what we could describe in the market. Then the more conservative approach is just to be patient. With that said, you'll be trading certainly alongside the 15-minute time frame. You'd have your break of structure. You'd then have a new 15-minute order block down at the lows, and then you'll be looking to take that position. The reason why I'm just trying to show you guys the different types of entry criteria is because you can see that there is a time and a place for this type of 1 minute intricate break of structure. There's a time and a place for just a structure point on the 15-minute time frame to be broken towards the upside. And there's also a time and a place for this type of entry criteria where you're looking for the absolute real 15-minute, where is that structure point break, and look for the pullback. So for me personally, depending on where the DXY is, I may be inclined to go over 1 minute break of structure and look for that long position. But then again, if I'm going to wait for that here, I'm opening myself up for two very easy potential losses, considering we have the range lows. So I'll double back on that. What I'll be looking to do is then range lows. I'll wait for the middle type, the 15-minute break of structure, pull back, and then off I go. So I'll flip it. I'll be aggressive first and foremost, and then I'll look for this type of entry criteria in the middle, the 15-minute that caused the break or caused the move into the area. Wait for that to be broken and pull back. Because if it is a range lows, you want to be a little bit more conservative from the lows of a range, because you recognize always how ranges can just be manipulated to the downside and do things like so. And waiting for your 15-minute breaks of structure is definitely going to safeguard yourself against how ranges are manipulated. Look, it's already drawn out. Cool. So that's EU, I think. GCAD. GCAD. So GCAD, let's have a look. Daily time frame, daily 50 MA, weekly order block still towards the upside, yet to be tested. So that's suggesting to me there's room towards the downside. 4 out of 50 MA. We've broken below, looking to respect it towards the downside as well. with that said, if I put I haven't done this because I didn't want to just put a 15-minute, excuse me, a 4-hour order block in the middle of nowhere. So I will refrain from doing so. And the reason why is because we haven't broken any structure points at the downside. You've probably seen it. What I want to do is put this order block in on the market and call it a 4-hour order block. But I'm not going to do that because price hasn't done anything to suggest to me that that order block should be in the market. Of course, there's going to be something there on 15 based on structure. However, to give that the backing of a higher time frame directional bias, I think is a little bit incorrect. So therefore, I'm not going to do that. So GCAD, what I like about GCAD, anything at the moment, it always looks good on the lower time frames, I would say, GCAD. But towards the upside, I know where I want to take a long position from, longer term. That's down here. In the immediacy, what's price action doing? So I can see that GCAD can print higher highs and higher lows. I can now see that GCAD has broken structure points to the left. It's pulled back into an area that calls that low. We're on the way down to make a lower low, but we're failing to make a lower low. Broken structure to the upside, come back. So potentially this could be a session low. Yeah, it was a session low. But maybe a reuse of the session low towards the upside, which would be the 4-hour 50 MA, where then at that stage I'd be expecting a rejection to the downside. So that's the thought process moving forward. Where could I look to take that position on the lower time frames? Let's have a look. So we see the session low being respected yesterday. Of course, I was a little bit more reactive rather than preemptive on that trade, I must admit. When I see price obliterate my position to the downside, I'm always asking, well, why was I so incorrect for that trade? I never just accept that a loss is just part of the game, which it is. But first, I want to find out, well, why did I lose? There is always a good reason for a loss in a particular trade, unless you're just wicked in and wicked out. But even the wick, more often than not, will come into a previous wick that's been created. So the point I'm getting at is I was reactive as a result of seeing price move out, or rather take me out, come into an area and just move off straight away. Now I'm looking to the left to see, well, what's happened, and you can see it. Beautiful session low in the market. Nevertheless, we move on. Long positions from potential session low, or long positions from these lows, or we take the short into the area where we believe that price is going to potentially move off anyway. At the moment, can I say that's been confirmed? No. What I would have preferred to have seen, excuse me, is that session low being absolutely wiped out. Then we'd come into this area and look for continuations. We don't have that. We have the session low actually being respected. Hence why it's still on the chart. What I'd want to see from GCAD today, move towards the upside, because at the moment I'm seeing price potentially, if we say, here's a low in the market, lower high. This lower low is technically lower than that low. However, we didn't close below the area. So GCAD is quite confusing because we can understand where GCAD wants to gravitate back down towards for the longer term play. However, we can still understand why GCAD could want to move towards the upside, certainly towards that 4-hour 50 MA. So GCAD, again, a little bit of a confusing one. So therefore, we're going to have to really be solid on the entry criteria. So first and foremost, this 15-minute order block is in on the market because it's the only 15-minute order block in the chart that at some stage this morning, I was perceiving this as a break. But the more I look at it, I mean a lower low, the more I look at it, the more I'm not really convinced that we have made a low. We just come into the session low. So therefore, I'm more inclined to trust this session low on the basis that we can get some structure points broken. So just by eyeball, I put this area in the market just here. It makes sense on the 5-minute time frame. So again, you fall into the category of wait for that type of break, pull back, bullish 15-minute candle because there is no order block here. Just like yesterday, I didn't take a session low trade just because we moved off. I waited for a bullish 15-minute candle that then delivered me like Santa Claus with a, oh, what is that selected? If I don't have a 15-minute order block, it just means I have to wait for one. 15-minute candle came out of the area. Here it is. It engulfed the previous one. Therefore, what did we have? An order block. Once the order block is then created, it's down to you as a trader. What's your risk? You're going to take it straight away on the first return? It's definitely available. This bullish 15-minute candle, especially if it's engulfing the way it is, 1 minute break of structure. So you're and I put in the chat, the long position is available because we've had a 15-minute order block being created as a result of that bullish engulfing candle. So therefore, it depends on you how risky you are as a trader. But certainly for me, I recognize the statistics on that. If I'm able to wait for a bullish engulfing candle, that's going to safeguard me against this kind of stuff. Straight away, you're looking to take a long from a session low. Price got other ideas. Boom, you're taken out. So wait for that bullish candle to close, 15-minute order block, and start the process. So how am I going to look to take that today? Pretty much the same, to be honest, because I like EU and GU. I don't love them, but I like them. I'll be a little bit more, what would be the word? Careful, can I say? So I'll wait for a structure point to be broken first and foremost, because this session low is kind of getting exhausted. We're not seeing the same powers that has come from it before, are we? So we're seeing price come in previously, move to the highs. Price come in previously, we've got a reaction, but have we really started breaking structure points? Not really. So I'm kind of clutching by allowing this to be a structure point. But we could all see it. The structure point is very much so clearly here. But I think that by the time we wait for that break of structure, I think the position on GCAD is more than likely going to be gone. So I'm going to wait for this to be broken, pull back, and I'm still going to need this anyway. Still going to need it. And for me personally, until I get the break, I'm not really going to be convinced by that session low without the break. I want the break first, and then I'll go for the entry model with the bullish 15-minute candle. But the structure break is definitely required first and foremost. I'm not just going to take a position from that session low without the break with a 15-minute candle. Need the break first, unfortunately. And then when price comes back down, 15-minute order block, 15-minute bullish candle, and then I'll look for the long position. On the flip side to that, of course, if price just obliterates those lows and comes down to this daily order block, then based on that daily 50 MA, I'm definitely in the market for long positions. So here's my 4-hour order block already in the chart. Haven't refined it just yet. I think price is not quite ready to get down there, we hope. But you see, I'm already prepared. Just need to look for a 15 and off we go towards the upside. So we're getting there, but I think there still could be room for moves towards the upside. So that's GCAD. AU, let's have a look at AU. So AU, very hesitant on AU yesterday. I think I had all right to be so, particularly because we broke above that 4-hour order block as well. In yes, is that Monday? Yeah. Yesterday, I could see that we'd broken above. So we were only trading out of that daily order block towards the downside, which I don't mind. But then you're not really trading from higher time from directional bias. If you're just trading from a daily order block, then you refine that daily down to a 15. Then with that said, we broke above the 15 as well. So I was just thinking, you know what? Of course you can expect after a high. It's quite annoying because we all know after a high, what are we expecting? A higher low. So yes, of course, price comes back down into the direction that you thought price would go there, but it's coming back down in the kind of the incorrect way, which is kind of like reverse engineering way of trading, where you're just anticipating price to move towards the downside based on your thought process being wiped out. That's not how we trade. We want to trade our accurate thought process and genuinely trade a position moving in the direction, not trade it because the thought process is wiped out And after the high has been now created, the higher low is now taking us into profit. So that's not really what we want to be doing on the 15-minute time frame. We don't mind it on the higher time frames. Of course, we recognize leg extensions. This trade is going to be a pullback on a higher time frame, but never do you say the position I'm entering is going to be a pullback on the lower time frame, because where does that pullback end? You have no idea, right? So that's that for AU. Just me trying to make myself feel a bit better about not taking the position, but I think it makes sense. Nevertheless, all right, daily time frame, daily 50 MA. It is doing the business, and that daily order block, that's the rejection you really want to be seeing. Now I'm excited. With that said, I have just about range to bring price back down towards that weekly 50 MA. So at the moment, where am I trading out of? I can take an entry from the highs. Yeah, I can. And short into a weekly order book, but I must be break even. You guys are probably bored of hearing that. But nevertheless, I'm just trying to build the confluence up so I'm able to actually take those on all accounts that I'm able to trade on. I like it a lot, AU. I think we're very patient yesterday, waited for price to do its thing. Now, let's see where we are on the 4 hour time frame. I like that break. I don't like that break. So we've broken below, but then we've created a higher high. The caveat on side is that we are still within that daily order block. And actually, look at yesterday's daily rejection. Although we've had, it looks like we're moving to the highs on the lower time frame, the daily rejection is really, really nice. The wick rejection to the higher either. So we've got this 4 hour order block that I haven't put it on the market, but I will do now. 4 hour 50 EMA, and then, excuse me, 4 hour order block. 4 hour 50 EMA would be the target based on the rejection towards the downside. And then we have the daily 50 EMA that is still on side. So I like this. Look at the difference compared to, let's say, the first pair that we went over, GU. All intervals. Let's sync that up. And then let's make it bigger. We now have, in my opinion, not is not the key structure point. We have to admit that straight away. So if we're going for a position in the journal, currently speaking, a short from the highs without a break of these lows, it's still an aggressive trade. Regardless of you looking for, so you have trades and then you have entries. You can have a conservative entry model, but still your position remains aggressive. So this is still an aggressive position based on the fact that the 15-minute towards the downside has not broken. And what I mean by, or rather the 15 minutes to the upside, I should say, sorry to confuse you. So we've made a high from this area, meaning that where is the structure point? Where made the high? I can't stress it enough. Here. So until this is broken, 15-minute is still bullish. Therefore, for you to take a position on a 15-minute time frame, it is an aggressive position based on the fact that you're trying to sell in a bullish market. So aggressive short without the break, conservative short with the break. Up to you, the type of trader that you are. For me personally, again, it's putting a lot of emphasis on the DXY, but understanding if the DXY is in a good point of interest or not, really for me at this stage in trading starts to dictate whether or not I take an aggressive position. If I can't get that confidence on the DXY, let's say, for example, but I'm at ultimate highs and ultimate lows, then perhaps that too will dictate whether I take an aggressive position or not. So at the moment, where am I on the time frame? I like the fact we've got rejection from the daily or the daily 50 MA. So here's the better position. Break, pullback. I'm quite happy that yesterday I had this as a structure point, and I said, you know what? Let me just wait for this structure point to be broken to the downside. Then I'll wait for the pullback and take the short. The price has done that for me. So therefore, if price wants to return back to this 15-minute order block, I will stick by my word. Let me just make sure that's correctly done. I keep moving it. Yeah, that's a 50-minute order block refine within the highs. I'll stick to my word. And then Hey Boris, good morning. I'm almost done to be fair. A little bit earlier than before, but you're more than welcome to join in, my friend. And then you'll be able to have the recording for the day. But feel free to stay if you want, or feel free to watch it back as you prefer, Boris. No problem at all. So I was just looking for price to then return back because based on what I said yesterday, I was happy for this structure point to be broken. I wasn't really considering the key structure point at that time. So therefore, I will stick to my word today. When price returns, I will be aggressive on the short because I have had a move away from price action, from the area initially in terms of the higher time frames. So what I will be looking to do is it's going to be still a 15-minute bearish candle. I'm not going to take it immediately on the return. I think I can do a little bit better than that in terms of awaiting something to be done. So the way that I'll be aggressive in my short position is, of course, on the way up, price is going to start printing higher highs and higher lows on the 15, on the 1, and even on the 5. What I'll be looking to do is isolate the same thing that we've got here on the 15-minute time frame. The most recent higher low that's been created, of which created the high, I'll wait patiently to see that broken to the downside. As soon as I take this, as soon as I view the break, at that stage, I'm going to see if there is an order block. If there's an order block up at the highs, I'll then be waiting for price to return to that order block, and I'll already have my sell limit set as soon as I get the break. And I'll be looking to take that position down to the 4-hour 50 EMA because I think AU looks very, very, very attractive towards the downside based on that higher time frame. Of course, 4-hour time frame looks a bit tricky. We're creating those highs. However, until I get a break above that daily 50 MA and a closure above, a closure above the daily order block by way of a bullish candle closure above the area, for me, we're still respecting it towards the downside. And we're fine within that area now. We're right up at the highs. 4-hour order block has been created. Therefore, we can start to understand, do we have those breaks of structure on the 15? If you're aggressive, like how I'm going to play it at the moment, structure point yesterday broke and pulled back, order blocks available. If you're more conservative, then of course, key structure point hasn't been broken just yet. Wait for the break, pull back, entry criteria, and then you can look for the short position down. So that's AU. And that's really my favorites of the day. So GU, EU, GCAD, and AU. GJ, just quickly, I still like GJ in terms of the shorts from those highs. We're starting to move away nicely from those highs. However, what I like better with GJ is a long position in line with what price action is doing. Daily time frame, top, bottom right hand, higher highs and higher lows. Refine an area down on the daily time frame that seek to make sense and refine that area down. We're refined within the 4-hour order block now, respecting price towards the upside based on the 4-hour 50 MA. If we look at that, higher highs and lows, higher highs and lows, higher highs and higher lows, all respecting that 4-hour 50 MA. So if price wants to come back down towards that 4-hour 50 MA, give me a nice candle like this. That's a beautiful wick rejection towards the upside. What that wick rejection will do is hopefully just tap into this 15-minute order block down here, reject it. That will be the wick rejection on the 4-hour time frame, and that's exactly what we'll view. A lovely candle that looks very similar to that one. So for me personally, GJ shorts look okay based on the fact that price is stepping down on the 15. But better still, I would love the price to tap into that 15-minute order block, and then I'll look for the long position up. Again, how would I look to take that? I'll probably be aggressive there as well, because I can see that price is respecting that. I can see that we're bullish across all time frames. So I really want to be trading alongside the trend. So what I'll do, again, just understand what price action is doing on the way down. Wait for the break on the lower time frame for me personally on GJ, and I'll look for that long position up. Of course, the more conservative approach is what we spoke about previously, or what I was speaking to myself previously about on the 15-minute time frame. Isolate the area. It's exactly the same on the 15. However, 15-minute allows you to trade alongside your entry criteria, your entry time frame rather on the 15-minute time frame. Exactly the same. Wait for the break of the most recent lower high, pull back into the area that caused the break of structure, reselect your order block if you're comfortable to do so as soon as you get that break above. Buy limit if you want the cherry on top of the cake. Nice lower time frame break of structure, very, very slight, and then you're trading alongside 1 minute, 5 minute, and of course your higher time frame points of interest as well. Therefore, that then becomes a good to a great trade based on trading the trend and alongside daily, 4 hour, even the weekly time frame. So you're on suit with all time frames, and you can't really do too much better than that, I would say. All right, team. So I'm going to leave it there for now. I will certainly update you guys with some charts going forward of what I'm looking at, but thinking to be a little bit more specific in what we're trading. So GU, EU, GCAD, AU, and also GJ thrown into the mix. US dollar CAD is probably one of those that I'm gonna not leave alone, but I feel that at the moment we're kind of in the middle of nowhere, and it's just lower time frame plays at the moment that would really take precedence. But I feel that when price starts to move slightly higher, we'll be able to manipulate the fact that we're trading short out of that higher time frame. So without trying to confuse everything and say, well, let's look for 15-minute price action positions only. I'm just going to wait for price to come up into these areas and then update you guys accordingly from the highs and then from the lows. And therefore, anything else in between was just going to be an Asia range. And to be honest, I didn't see an Asia range that is clear and obvious to take, to be quite honest, because where's the breaks of structure coming from? Is this the move, or are we going to say, is that the type of move? Higher highs and lows, higher highs and lows, higher highs, higher lows, higher highs. So potentially if price comes back down, Asia's available, maybe from that area, or could it be this area in between? So it starts to get a little bit technical and we start to run into taking a little bit too many trades based on not really obvious plays. So this is the 15-minute time frame. Of course, Asia's available, but where did the break come from? Is it definitely here? Or can I say it's from this area? Or could I say it's from slightly lower? So it's quite tricky. And even if you want to take an Asia range from here, then you can already see that you're exposed to a loss because you have a nice area down at those lows. So I'll keep it there for now, everyone. And I'll get this pre-recorded, send out for you all to have a rewatch throughout the day. And I'll be with you shortly. Do take care. All the very best. Boris, take it easy, my friend. Thank you very much for joining. Sorry, it's an early one. Take care. All the best.
Thank you, no problem.
Take care, Boris. We'll speak soon.